interesting week, folks, and we ended up on Friday pretty flat, and it was a bit of a slow trading day, as we all know that Monday is Martin Luther King Day. So we really wanted to see how we went into this weekend and if traders really held positions over the weekend. And it's been a good run. We started with earnings season this past week, and we saw the financials come out with some reports.
Yeah, looking at the financials, it was really a mixed bag. It was almost this tale of two types of financial institutions. Last year, the big winner in financials was JP Morgan, and that actually kind of continued with earnings season. When I was listening to the earnings calls pre-market open on Friday, it was fascinating listening to Jamie Dimon and then the CFO talk about the economic outlook. Number one, their results were just very strong, right? Very profitable. I think it was the best one that they've had in like 7 years. But the outlook I found to be a little encouraging as well. They were talking about how they're budgeting for an increase in some defaults and delinquencies, but nothing outlandish. So it seems like the consumer is still doing what the consumer does best, which is consume.
Right.
But then you had those other financials where they're kind of struggling a little bit. I think that we've heard from like Citi,
Right.
That's one, they're going through a transformation.
And lots of job cuts.
Yes, that is one of the things that we've been hearing a little bit more about, and we will be very keen to listen in on with earnings calls is how many more companies are going to be announcing job cuts. What we had over the last 2 years is what economists call labor hoarding. So companies know how hard it was to find talent, and so they would just keep them on, even if they didn't really need them. They would just hope that people would exit either through retirement or through quitting. But now companies are getting a bit more proactive about letting people go. Financials, we even heard from Google and Amazon that they're letting some people go.
So we're starting to see some job cuts, folks, and we're going to have to pay attention to that. And let's quickly change gears and talk about inflation. I know we've pounded this topic to death, but what we're seeing right now is very interesting. We saw a CPI report on Thursday and a PPI report on Friday. Let's explain what that means.
Yeah, a little mixed messages from those two reports. And inflation, I'm not sure if you can ever spend enough time on it because it's just the gift that keeps on giving. And this past week, so CPI, Consumer Price Index, is supposed to be a measure of like the average cost of what people buy. PPI, Producer Price Index, is basically from the business side as far as what are they getting for what they sell. And so our costs going up, you see that with PPI, our prices going up for consumers, that's CPI. And we got mixed messages.
Yep.
CPI was hotter than expected, 0.3% month on month, whereas PPI was less than expected. It was actually negative, negative 0.1%.
Which is deflation.
It is, exactly.
So that's 3 months in a row, Brian, I think.
Yes, it is. Yep, PPI has been negative 3 months in a row. And for the last year, producer prices are up only 1%. Whereas if you look at consumer prices, that's closer to like 3 to 3.5%.
And we talk about deflation, and not only here, we've watched this very closely on this index, but what we're also seeing that in China. They've also had 3 straight months of deflationary environment.
They have, a lot of weak growth in China. Now, I do have to say it is still growth. It's just weaker than what a lot of people were expecting. They're probably going to come in 2023 when they finally report their numbers. They're one of the first ones to report, probably around 5 to 5.5% growth. But that is very weak for them. That's down from 10% just a few years ago. So they've really decelerated their growth rate. And consumers just really aren't out there spending like they used to. The government is likely going to have to do something when it comes to stimulus in 2024.
And that's it. That's the relevant point, folks. What is the Federal Reserve going to do? They are indicating that they're going to lower interest rates as we go through 2024. How often and how dramatic they do that, especially before the election, will tell the tale, folks.